All right, what is going on, YouTube and Discord family? And welcome back to another edition of Top Down Analysis. This is a special edition because it's the first time I'll be doing this. I already did my top down analysis for the indices. I'm going to be starting a new series where I break down a couple commodities that I also trade. I trade about five different indices or five different instruments. I trade the S&P 500, the Nasdaq, and the Dow Jones. But also, I've been trading gold for a little bit, and I'm starting to enter into the realm of Bitcoin. I've always been an advocate of crypto. This channel actually used to be called the Crypto Shop instead of the Trader Shop. I changed the name because I wanted to, integrate in all instruments, not just crypto. So now that I'm very, very well versed in those things, I've now decided to do a new series of the top down analysis that includes my Bitcoin breakdown and my gold futures breakdown. So hopefully you guys enjoy this. And if so, please make sure you tip the barbers, aka hit the like and subscribe button down below. Leave me a couple comments. Let me know if this helps you on your journey. That being said, let's get right into the chart. All right, so Bitcoin, we'll start over here with BTC, and we'll start on the monthly time frame as we do for every single instrument. First thing you want to note is that there's only 5 days left in the monthly candle. What you want to see out of this monthly candle, BTC has done that and done it very, very impressively, which is you want to see the monthly candle, the previous month candle, high to low, hold as support, which we got that. You want to see this month's candle act as a higher low, which we got that. And then you want to see the market close above the previous month. You can see that no matter what happens over the next 5 days, I seriously doubt if the monthly candle is going to give back all of this buying, right, and not close above 96,000. So the goal here, close above 96,000. Even if for the next 5 days we slam down all the way back to 96,000, I would not worry because I would assume the next month we'll be pushing back above all-time highs and pushing toward those all-time highs. So ultimately, you got to give the nod to the bulls, no matter how bearish or bullish you may be on this instrument. Just look at it objectively through the structure, through the eyes of structure. Okay. So let's move on down to the weekly time frame. And again, I'll turn on the 200 EMA, which is this red line here, and you can see that we've been holding well above it. If you like to watch those EMAs, right? This is also, I should note, this is not the continuous chart of Bitcoin. This is the Bitcoin futures, right? So this is the micro Bitcoin futures if you're following along with the chart. Is there a mini future? Yeah, but I started charting on the micro, so that's what I'm going to use, all right? It's not going to be a big difference in price action, right? First thing you want to notice is we had the double top here, right, for all-time highs. And again, we came back up here and put a new all-time high on the continuous chart, but on the micro Bitcoin futures chart, we actually haven't made an all-time high yet. Although I'd say that we're pushing back toward that area. But again, if we're just analyzing the weekly candle, what are we looking for? We're looking for higher lows, higher highs, closures above the previous highs, and we're getting that every which way we look. Not 1 week have we traded back into the previous candle, not even 50%, let alone a full 90% retracement. That's very bullish. This week, we did the same thing. We put in a higher low at about 102,460. We got above the previous high at 106,155. And then buyers were able to push up to 112,275, indicating that they want to trade higher. As long as we continue this pattern of making higher highs, higher lows, I do see opportunities to get short, but not until this structure breaks or this order flow breaks. In that sense, you have to give the nod to the bulls and continue to trade this market higher based off the closures on the weekly time frame. If you are going to be a bear, you want to see the market close below 100,000 first, and then you can look to target that 98,000, 96,000 level, which will be a retest of this high to low time frame here. We were taking a Fibonacci retracement, right? And we were to go from this previous high just based off structure. We go to this previous low based off structure. We'd be looking for the market to retest about 93,920. Now, how it retests that, whether it goes back up further before coming back down here, we will get a retest of this level at some point, right? Especially to close this gap down to 87,470. The market will close that gap at some point. How it delivers it, when it delivers it, at one point in time, that's something that none of us will ever know. We're not privileged to know that information. Moving down to the daily time frame, we can see that some things start to come about for the bears, right? If you're a bear, you're excited by the fact that we pushed above the all-time high and the market wasn't able to get in what I call blue sky territory. Because we weren't able to push above the all-time high, stay above the all-time high, find support above the all-time high, then it introduces an opportunity for bears to get excited. You can see that that's exactly what the bears did. They sold the market down from the all-time high, 112 down to roughly about 107. So knocking us back about 5,000. This could be a lot of profit taking. This could be people introducing sell side positions, assuming that the market won't get above all-time highs. But again, if we take it from the monthly down to the weekly, now here to the daily, we can understand that this daily red candle, although it is bearish, it's not enough to change the trajectory of the monthly and the weekly time frame. Therefore, if you're a bear, you don't want to, if you're a bull, you'd want to see the market hold above 106, 250 through roughly about 101, 101,000 is what we would call it, right? You're okay with a pullback all the way back to 96,000. I'll keep saying that level, right? Because of the simple fact that we know structurally, if you follow me on Twitter, YouTube, or more importantly, if you join the Discord, what you'll find out is that we don't follow a strategy. We create our own systems and they're all based off of structure. The one thing that we do is we understand that structure offers an opportunity to understand where price could go to and why, right? You can use this off your basic Fibonacci's. I'm just telling you how I get there. The market took out these highs. Once it closed above these highs, and I'm looking for a retracement back into the 70%, the 50%, and or the 30%. When we get back into these levels, we'll be closing gaps right here at 96,000. It's the reason why I keep talking about that level. So I'll be looking for the market to tap back into 96,000 through 93,000. And I'll look for the market to offer a higher low so I can trade it higher. If the bulls are very much in control, then you don't want to see the market get below 101,325. And then again, higher low offering, pushing back up toward the higher points. We'll get down to my predictions on exactly how price will be delivered as we drop down to the 4-hour time frame. We bring over my top-down analysis, and I'll break down exactly where I'm anticipating price going in this week. Because the instruments or the indices are selling down, Bitcoin tends to act like a safe haven during inflationary time periods. Bitcoin and gold, it's a reason why I'm making a separate video for them. So that being said, it makes me more bullish on these two instruments than I am on the indices. Doesn't mean that they can't trade down. I'm just giving you my perspective on them as well. That being said, we have the previous day high, previous day low, and the daily. These are all levels that I mark every single day. And then we have our weekly fib, and above the weekly fib, I'm anticipating the market being in what's called premium, meaning if the price is above this purple line, then that means that the market should be looking to sell down at least to this purple line and potentially back to the other side of it, because essentially we're splitting the market between premium price and discounted price. As we get closer to discounted price, buyers start to step in. As we get further away from discount, it creates premium. Sellers start to step into the market. That's essentially how I view the market, okay? Therefore, what am I anticipating? If the market wants to go higher, okay? Think about open, high, low, close. The way that a candle forms, it opens, it hits a low or a high, right? And then it ends up closing above or below those positions. If the candle is trying to go higher, it needs to trade down first in order to create a wick, right? It has to create an extreme usually, unless we get gap ups. So therefore, if I'm looking to be a bull, I want to see the market trade down first. I want to see us go back down to the end wall, sitting at 104,000, 104,440. That level would be a retest of these previous highs or these previous lows that brought the high, and then a closure of a small little gap that we have in price. I'd be looking for the ATR or the weekly average true range, right, to push us up 8.21% at 112,950. And yes, crypto bros, another all-time high, okay? If we can't get on the other side of discount, meaning we can't trade below 107,330, then we're looking for the market to hold this level and then push us up 8% up to, that's right, another all-time high at 115,815. If we can get this retest, then I'm long biased all the way up to about 115,000, 116,000 this week. because that's the average true range. It's not based off somebody else's momentum, somebody else's opinion, somebody else telling me to buy. It's just objectively speaking, right? And if you're looking to learn how to do this, you're more than welcome to join the Discord. The link will be in the description down below. That being said, if you're looking to be a bear and this continuation of the order flow shift continues, you'd want to see the market trade up to come down. If the market's going to trade up and create that wick, I'm anticipating a push back into the chessboard high of about 110,300, right? We tap into 110,300. I'm looking for about a 7%, 7.5%, 7.76 to be exact, percentage down back into 101,740 to close the week off, right? If we can push or gap down, meaning the continuous chart has traded below the weekly fib already, then I'd be looking for a retest of the weekly fib at 107,330 and looking for a trade down 8% back into the 200 EMA, pushing back down to that level that I've been talking about at or around 96,000. You know, this gap has already been closed, but it'll still act as strong support, pushing us back down to 98,735. Either way it goes, I'm going to trade based off my top-down analysis. And depending on how we open up, that's going to tell me exactly what I want to do moving forward. Those are my thoughts on BTC. If this is all you wanted to see, you can stop the video here. If not, you can go on to the next chapter in which I break down my levels for gold over here. All right, moving on to GC on the monthly time frame. Again, this has been another super duper bullish instrument, right, that we've been following in the trader shop for quite some time. We have a very, very, very excellent model on how to trade this in the Asia session, the London session. I don't really trade it as much in New York because it tends to consolidate, but you can do your research or tap into the Discord and we can break down exactly how we trade it. Again, we have systems, we have models, but everything is based off structure first and foremost. That being said, let's read some of the structure for the monthly time frame. You can see again, the market is trying to push and make higher lows and higher highs. And you can see that May is no different. We came down aggressively, made a higher low, and we got officially 5 days to get back above 3508. So this could be a very bullish week, starting with the opening session of Monday. Don't be surprised if we get a gap up and we start pushing aggressively back to these highs to put in that higher low or that higher high for the monthly, right? With Trump issuing tariff talks and all this other stuff, people tend to continuously buy gold and now Bitcoin, which we're viewing as digital gold. And it's only going to push these instruments higher and higher as the stock market continues to push lower and lower, or vice versa. Stock market pushes higher and then these instruments start to liquidate. Okay? Let's move down to the weekly time frame. We can see that again, it is supporting that thesis even much clearer. We had a low bring us a new high. That low is now validated because it brought a new high. Therefore, the market taps back into this level. It holds this low, and now this new weekly candle has done its job. It got above the previous candle, and now this low is validated here from May 12th. And now, as we start to push, you'll see us trade back into the weekly candle and then try to push higher to get above this high, and then eventually get back above 3,500. And then it's going to be blue skies territory that we're just going to have to base it off of the data or the average true range in regards to where price is going to go. Don't worry if you don't know what any of that means. Best believe I'm going to give you my predictions going into the week. Daily time frame. As we break down the daily time frame, we look and see the same thesis is happening here. If you're a bull, you're very happy with the fact that we offered a higher low here. The market accepted it, and now it's looking to make higher highs, again, targeting all-time highs, as well as 34.41.6 first. To the downside, what you want to see is you want to see these bears defend 3373.3. And if they can defend this, then there's an opportunity for the market to take out this low here, as it has not gotten above a swing high as of yet. Also, things to note to the bear side. The market did break structure here at 32.9, and it did have a nice closure below. So what you want to see is a run of these highs and or previous low, which is this low here, to the previous high here, actually offer a lower high and then a change in the state of delivery. And then we start to push back down toward the 31.14s. I don't really like that thesis just because the monthly time frame doesn't offer that same thesis. The daily it's a strong time frame, but the weekly and the monthly are higher, which means that they're going to trump what I'm seeing on the daily. So I'm going to trust what I'm seeing on the monthly and the weekly and anticipate more upside as opposed to more downside on the daily time frame. But we'll see how it develops. Again, I'll be watching this level to see how we react to it. Coming down to the 4-hour time frame, I'll bring out my levels on the top-down analysis here, and then we'll open this up, and then we'll break down exactly where we are. Where we're sitting currently is inside, or we just broke out of a new week opening gap. Now, I'll take this off. I'll let you take a look at it here. You can mark these levels, 33.29 through 32.79. I'll take it off just because it's aesthetically, it's a little bit easier to go over what I'm trying to tell you guys if I don't have that big orange box sitting right there. All right. So what are we looking at? We're above the end wall. The end walls, if you guys don't understand what they do, they're essentially institutional support and resistance. So if we're above support, again, that level is going to continuously act as support. You got another one down here acting as support. That's an indication that we're trying to go higher, right? And it supports the monthly thesis. Again, if we're trying to go higher, you again want to see the market trade down first. If the market's going to trade down first, we have what's called a chessboard low. It's my personal model. If you want to know more about it, please make sure you join the Discord. Cheap as hell. Link is in the description. Join if you like. If not, I will continue to put these videos out for absolutely free. Chessboard low, 33.49. Right down here, we're looking for the market to push up 4.78%, pushing into 35.10, and that would automatically put us in all-time high territory. Again, I'm anticipating a gap up. Therefore, I'm marking previous day high as a level that the market will push up from. Retest this level, hold it from 33.66, and I'm looking for 4.75% up. Weekly projection puts us at 35.26 to the upside from this area here, right? Basically continuing the upside push. Even if I'm a bear, I still want to see the market trade up. I want to see the market aggressively get up here by Monday or Tuesday, push into this 4-hour supply zone, and then just trade back down 4.57%. So you could be a bull to start the week. And as soon as we close all this liquidity, we get underneath this. If by Wednesday we haven't gone higher or we've hit these projections by Wednesday, then I'm looking to see the market trade back down into 4.57% at about 33.48.6, and then pushing down a little further, potentially into 33.05. Anytime gold hits an all-time high, it tends to push up a little higher and then aggressively sell down. So these are the levels I'll be catching it. So this week, I could see gold hit the bullish marker as well as the bearish marker all in the same week. So gold's been moving quite astonishingly. So if you're looking to trade a different instrument, I strongly advise you look into gold, you look into Bitcoin, because like it or love it, these instruments are coming, right? They're definitely on the move up, right? The volatility is there. The participation is there. It is an instrument that is, certified on the futures market. Bitcoin is not something that you should ignore as a trader, in my opinion, because I feel like BTC is going to be one of the instruments that I'm going to be trading for the foreseeable future, because it offers so much opportunity in any session that you want to trade it, whether it's Asia, whether it's London, whether it's New York. BTC offers that opportunity for you. The same thing goes for gold futures. So if you're tired of getting, wrecked around the coals, right? Ran around the coals, the market's kind of moving sideways on NQ, ES, and Dow futures. Consider expanding your horizon to some of these other instruments. As far as news goes, I'm not really going to go over it because, to be quite honest, although these instruments move with news just like the stock market does, they're not as aggressively affected throughout the week. So I would just say trade the structure, look at these levels, consider putting them on your chart as well, and then let me know how it goes. If you guys like what you see, come back and see me. I'll be back next week. Thank you guys so much for tapping in. My name is T. Hobbs. This is The Trader Shop, and I'll catch you guys on the next one. Peace.